Hey guys, this is how to invest for beginners. And I want to start this off with a little bit of my background and how I've had different experiences with trading and investments, and especially in the stock market. Whenever I was 12 years old, I actually dragged my parents into a meeting for selling mutual funds. It was with a brokerage that actually charged me commission. And I had to have my parents there to actually push through the transaction basically because it was a custodial account. Um, but basically, what happened was I was really interested in the stock market and everything. And I contacted this company to look into mutual funds and see what they could set up for me and give me their preferences on which mutual funds and which groups they were really targeting and predicting to do well in the next year. So I was about 12 years old and I had my parents come into this meeting with me, and we go in there and they're just advisors, right? They're financial advisors. They're just selling stocks. They handed me three packets that basically they slapped it on the table and they said, these are our recommendations. You can pick. Did not give me any other options or anything like that. Very basic. And what I didn't know is, well, I picked one and I liked the percentage growth, and everything else was not very knowledgeable of the stock market at this point. And I went into it and I put a small amount of money into it. And after 1 year, 2 years, nothing really happened. And so I was like, what is going on? And so I took a deeper dive, I read some books, looked more into the market and everything, and I realized, wow, this really has a high commission rate. The expense ratio is also very, very high. So basically, what they did was, hey, they make money off of selling it at the start. So they got us into the three top highest commissions, and that were also yielding good results. So that is true. But they mainly just took high commission accounts because it favored them. I mean, it was more desirable for them to make 1.5% commission on whatever I invested than to offer something lower. It doesn't really make sense for them to not get paid adequately. So uh, that's the first part that I've done. I've also traded options through high school. I traded contracts quite a bit through high school. Not really too much of a fan. I've made quick money doing it, but I've never executed contracts, so never really touched that. And then I've also traded individual stocks. I've day traded, I've made money, and then I've lost money. So, very volatile with that. It's hard to predict the market, especially in long periods of time. You might have 1, 2, 3 days that you win a week, and then maybe two red days a week, or you might go 2 months without a red day, and then eventually one catches up to you and it's a really big loss. It just depends. So, eventually, it's really hard to beat out the market doing it 99% of the days out of a year. So, the ultimate strategy that I finally came across was having a fiduciary, which is someone that does not give a certain percentage. They don't get a commission based off you. They just charge you a fee every 3 months or every quarter, and then they do all the investing for you, and then you direct them and you say, hey, I would like you to use your preferences to put me in index funds. So I'm a big advocate for index funds because there's no choices. You don't have to buy in now, sell out 5 seconds later, get in, get out, get in, get out, and you might make a one mistake that could lead you to lose 20% of your income that's in there. So it's a lot more secure, and also index funds have this very, very low index or expense ratio. It's very, very low. So even mutual funds, typically lower than the average individual stock and basically everything else. And then right below that, an index fund is essentially the same thing as a mutual fund, but instead of zero point 0.5 to 1.5% expense ratio, which is what you pay out in the beginning, it's actually 0.02 to about 0.20, 0.3%. So it's really, or I mean 0.02 to point 0.2, but sometimes it can be point 0.3, but it's really in that ballpark. I mean, it's basically right once you buy in, you're not losing your ass. So, um, essentially, what you should be doing is take whatever money you're comfortable with on a monthly basis or every paycheck. If it's $100, $200 a paycheck or something like that, just if you wanted to start out, you go take it to an advisor that gives you a good deal, maybe, I don't know, $100, $200 per quarter is what you pay, and then they handle everything. Depending on how much money you have in there, it'll change, it'll fluctuate, but I'm sure they have a base rate. But essentially, you just take it to an advisor, and even if you're not comfortable about investing, just ask for a cash account. So the first part is cash account can usually yield from 3 to 5% interest, which is significantly better than the average savings account, which is typically 0.07%. It's very low. So this would be 3 to 5% total instead of 0.07. So pretty good interest even just in a cash account. But even from them, you can kind of dip into that cash account, which is basically a pool, and then you can move that to an investment account. And you can make trades actually out of the cash account. But what I recommend is going into these index funds that are low expenses right up front. So it's low expenses all around, and then constantly putting in $100, $200 every paycheck. If that's possible for you or whatever you feel necessary, obviously you know your own budget better than anybody else. So whatever you can handle, just throw it in there. And then I'm going to teach you the next trick. So some advisors do this, some do not, or fiduciaries. If you take those investments and whenever you get paid out, typically index funds will pay you out a dividend. So it basically says, hey, you're an owner. We're going to give you a portion back just to show you our faith, right? And so they're doing well. They give you a little piece of the pie. So you receive this dividend, maybe $10, $20 a month, whatever it is. So you get that in. Right once you receive that, there should be a way where you can talk to your advisor where you should be like, hey, reinvest that immediately. So right once you get that in, it should go back in because you're basically taking that dividend and you're making it work for you. There's no point of you seeing that $10 or $20 now. Let it just roll over, and then every few months that they pay you that dividend, just go ahead and roll it over. Just say, yeah, I'll just reinvest all of them. And then it just keeps rolling and keeps rolling. Let the advisor look at the market and give you pointers on how they're doing it, or let them handle it all. You don't really have to have too much stress in this because it's not day trading. It's not one stock, it's the whole market. So over year after year, month after month, everything's going to go gradually up. So even if you have a bad day, oh, it's a red day, oh, it's a red week, that's fine. Next week, or if you want to, throw in a little bit more. If it's a red week, throw in a little bit more and you'll see it jump in the next 2 weeks. So that is my preference on what you should do with investing as a beginner, basically. I would take a little bit of money. I would take a little bit of money in the beginning and I would put it in an investment or cash account. Let it just show there. Whatever you need, you can leave a little bit, like $1,000 in cash just for like an emergency. You can pull that out anytime. And then I would tell the advisor, hey, use the other grand or whatever. Use 50% of the account and go make some trades on index funds. And they'll do that. You'll see 8 to 12% every single year. And then you put in $100, $200 every single paycheck. It's going to grow and grow and grow. You're going to forget about it. And then at the end of the year, you'll be surprised because the market always beats everything out. That's just how it works. I want to talk about one extra thing. If you stuck around till the very end, you're going to get a little bit of a knowledge check. So basically, I graduated from college with a bachelor's in economics. And one of the big things that really stuck out for me was market theories. And one of the market theories really dials it in whenever you're talking about individual funds or mutual funds or index funds or anything like that. So it's basically the average Joe theory. So whenever you're talking about the stock market, who is going to be the most successful? And they say, look at this average Joe right here, and then look at this Wall Street exec. So with someone on Wall Street that knows the market like the back of their hand, they trade and trade and trade. And they say, basically, this average Joe is better off picking a stock at random than to try to beat this Wall Street exec. So if you're not a Wall Street exec, you're better off picking a random stock, just drawing out of a hat, pulling it out. Yep, I like the name. Let's go with it. You are better off and more likely to turn a profit in a year to do that, to just randomize it, than to actually try to actually predict the market like a Wall Street exec would try to. So without prior knowledge, just to the average Joe, that is very much indicative of where you should put your money at. Is don't try to predict the market. Don't try to do this individual stocks and stuff like that if you don't need to. Anyway, I mean, some people can get really good at it, and I'm not trying to deter you away from that. But if you wanted a safe route, that's something you don't have to look at. You're really busy at work. You do 60 hours. You get a lot of cash flow. This really is an indicative sign to take some of that money, put it in that index fund, put 200 or whatever every paycheck, let it roll over. That theory literally tells you, hey, it's okay to not be a Wall Street exec that's your forte. You can still use the market to make you a lot of money. So that was the final piece. Is I wanted to let you guys know a little insight to what I've learned in college and stuff like that. So I appreciate your time, guys. I hope you guys can take these lessons and implement them and eventually be rich. So thanks for sticking around, and please like and subscribe. It really helps the channel grow, and I'll see you in the next one. Thanks.